It's time to prepare for the Federal Reserve meeting, which is a special day. This June 12th will be very special because not only are you going to get the CPI inflation report at 5:30 in the morning Pacific time, 8:30 Eastern, but you're also going to get the Fed on the same exact day. That's going to lead to a lot of volatility in markets. And here's what to expect. First, you're looking for CPI to come in month over month at just 0.1% with headline. That's pretty good. Core 0.3, which is actually about 0.28 right now. So really, as long as we get something in line with expectations on CPI, we should have a positive Fed day, which should be bullish for markets. You just don't want CPI to come in with a 0.4 on that month over month because it's probably really going to adjust what's going on at the Fed. But the Fed is really concerned about two big things. One of those is potentially taking a gun to the market. Taking too big of a hammer to the market to try to quell inflation, when the reality is we're starting to see some nastiness in the actual weeds of the jobs data. Let's be real. Jobs data that came out Friday, the headline looked fantastic. It's like, oh, look, another blowout report. But then you go into the details and you're like, wait a minute. Part-time workers up 286,000. Full-time workers down 625,000. Now that's a wild number because that means for every 2 full-time workers that are leaving the industry, 1 come back as a part-time worker. Okay, I wasn't expecting the balloon there, but yay, let's celebrate. Yay, 1 person came back as a part-time worker, but 2 people left full-time. Yeah, we don't want to talk about that. That's a problem. And the Federal Reserve looks past the headline BS, the political BS, and they look and go, oh, yeah, we've got real weakening here. And remember, the sectors that are primarily growing are government and healthcare. Those are late cycle, not great. Fed knows that. And frankly, if we send a signal to the market that's going to send yields up in the bond market, we might induce another bank failure. I mean, consider what happened with the FDIC report. We saw failed banks increase their risky asset exposure by 15 billion, or the number of assets that are exposed to risky banks increased by 15 billion. This is a good chunk. We had a pretty big increase in the number of not just risky banks, but also the assets that are exposed to risk by basically being level 4 or level 5 risk banks, which is bad. Those are the worst levels at the FDIC. So the Federal Reserve really has to balance this. Okay, so GDP supposedly is over 3%, which is great. We're booming. As long as inflation is relatively stable, call it, 0.28 on that month over month, we really got to start talking about rate cuts. That's a big deal. And so I think the Federal Reserve really wants to come out this week and go, just give us an inline inflation report. And then can we start pricing in at least 2 rate cuts? The market right now is pricing in 1.5 rate cuts for the year, and that would be in December, and only 0.8 rate cuts before or by November. So the reality is you might get 1 cut November, maybe 1 cut December, or just 1 cut December. That's what the market's pricing in now. So you are going to see this, my guess, you are going to see this the dot plot, go from 3 rate cuts, which is what we had the last time. You're going to see that go down to 2. So that would be very normal. So this 4.6 here on the Fed's funds rate, I think will probably go to 4.8. Now, if they keep it stable at 4.6, the market's going to skyrocket and moon. And those are your trades, right? So set this up for a moment. You're going to trade pre-market on CPI. Obviously, I'll be streaming live at the Meet Kevin market channel. Make sure you're subscribed to that one. I'm live every day at 5:25 in the morning. So we'll be covering that. I'll go live at like 5:25, 5:20-ish, maybe a little early for CPI. We'll cover CPI. If you get a month-over-month core read that's above 0.35, that ends up rounding up to 0.4, bad news. It's going to put a bearish taste on everybody's mouth for the FOMC that day. Okay, that's your trade. If you get anything in line or lower, bullish. So like 0.28, 0.3 or lower on the core month over month, bullish, moon, okay, good thing. Then you might have some patience though until the Fed meeting because you'll need the Fed to reiterate it, but they will. They will probably go down to 2 rate cuts, but that's not actually going to be bearish. Now, if that Fed funds number goes, because that's already priced in, right? This being 4.8 is already priced in. Now, if that number's 4.6 and they keep it stable at 3 rate cuts for the year, moon. If that number goes to 5.25 and they price in 0 rate cuts for the year, tank. Okay? So that's your play. That's really what you got to pay attention to. Do we really care about the Federal Reserve's GDP projections? No, because we really already have those at the Atlanta Fed GDP, and they're good numbers. Do we care about their unemployment trajectories? Yes, but do we really think they're going to change these much? No, because these unemployment numbers are basically a reference to the high-level payrolls and establishment and household reports, which are quite frankly skewed by immigration anyway. Now, is it possible that because we're now quote unquote closing the border, we're going to have a smaller set of job gains because immigrants, even undocumented immigrants, can be counted in some of these BLS labor reports? They should just call them the BS labor reports, but whatever. Yes, they can be. And is there a potential that closing the border could actually lead to a weakening in the jobs market? Yes. But when? Well, it'll take a few months, at least. And that's, dependent on how much confidence you have that the border is actually going to somehow magically seal up. But anyway, so I don't know that there's a massive near-term catalyst that says, oh yeah, this is the month where the jobs data turns. But if the jobs data rolls over, like it kind of already has been in the underlying, the Fed's going to start cutting more rapidly. What are the odds of a surprise cut on Wednesday? 0. What are the odds of a coupon expiring Wednesday? 100%. In fact, we just added one. It's coupon code .plot. It's a really special day because when do you have the Fed and CPI on the same day? I don't think that's ever happened in my career where they basically have to base their meeting on CPI data that comes out that morning. That's crazy. Or base their sort of, FOMC projections. That's kooky and crazy. So that's going to be wild. Now, there are a few plays that I'm making, and these aren't guarantees. They're hedges, but they're swing trades. I'm talking about them a lot in the Stocks and Psych group and just in the course member live streams. What I'm trying to do is I'm trying to place maybe 2 short positions, and maybe I'll go for 1 call position a little later this week. And so my goal is to be a little bit more like long portfolio, long, diversified, train America. But I want to set up a few swing trades that I think are going to give me an asymmetric victory if we have a risk-off movement, which would be like CPI is a little warm, the Fed's a little ambivalent, people are a little uncertain, the sell in May go away, shows up in June now that momentum's gone. And so I want to set up a couple shorts and maybe a long as a swing trade, and the goal is to hold those, depending obviously on what happens with data on Wednesday. That could flip everything. But my goal is to hold those for about 30 days, and I think they're going to play out well for me. Now, obviously no guarantees, not personalized advice, but really what I'm trying to do is hedge myself for somewhat of a bleed over the next 30 days as what we get this week just turns into more uncertainty rather than clarity. I think that's a lot of what we get. It's just like, okay, that didn't add much clarity. So we'll see. This is just the thesis I have. Obviously, if you want lifetime access to those programs on Building Your Wealth, go to meetkevin.com. Coupon code .plot. We'll have it expire Wednesday. And if you have questions, email us at staff@meetkevin.com. So as far as these swings, I always want people to remember, like my long portfolio, the goal is diversified, 20, 30-ish stocks. You go long, train America. That's my MO. But in a trading portfolio, you can do different things. And something's happened in trading recently that you should be aware of. We have gone from a period of momentum, which was momentum. That's just a coincidence. And so we've gone from a period of momentum where you could go long a stock when the trend was up and it just kept going. You could go short a stock and it just kept going when the trend was down. Momentum somewhat came with Roaring Kitty, but it also sort of left with Roaring Kitty. We've seen momentum substantially slow down. We're getting more consolidation patterns, and that's a precursor to a downtrend. So I'm about a 4.5 on the bull bear scale right now. 10 ultra bull, 1 is ultra bear. I'm about a 4.5 right now. So I'm building up some more hedges. You know, I'm not like all in. I'm not going margin here. I'm not going YOLO or whatever. And I'm staying away from the short-term day trade momentum, which worked really well in May, made a lot of money in May. Obviously, there was some give back over the last week as we transitioned to a consolidation period. But now my concern is we go from momentum to consolidation to bearishness, at least for a brief period of time. So from a trading point of view, we might get some uncertainty. Now, again, if we get a glorious CPI report Wednesday morning and a bullish Fed, okay, well, maybe then you don't need your hedges, right? Then maybe you just stick with the call play that I'm probably going to be setting up within the next 48 hours. So I'm going to have a massive call play that gets set up within the next 48 hours, and I think it's worth paying attention to. So stay tuned, buckle up for that. That'll be really interesting. So anyway, yeah, these are my thoughts. So let me see what else there is. So we talked Fed, we talked CPI projections, we talked, let's see here, we've got catalysts. Apple could be buy the rumor, sell the news today. Nvidia post-split. Usually, by the way, post-split, you're bearish. So you've had quite a few stocks that have gone bearish post-split. Heisenberg had an interesting post on this on X. Tesla in the 6 days after the split, negative 12%. Apple, 3 days after the split, plus 10. Following 3 days, minus 20%. Amazon, 6 days after the split, minus 21%. Google, plus 3% after the split. Next 4 days, minus 10%. And then Microsoft, a 10% decline after the split. So you could get sort of like a near-term buff here on something like an Nvidia. But historically, splits are usually a little bit of a toppy moment. So that'll be very interesting as well. So yeah, that's okay. Now we've covered Fed, splits, inflation, jobs, trade versus long-term thesis. I'll have a real estate video coming out. Stay tuned for that. A lot of really great insights from traveling this weekend, along with house hack updates. Still hiring, by the way. It'd be really cool to actually have some like girl applicants, because it's like 90% are dudes. Actually, lately it's been like 100% are dudes, which is fine. I'm just saying, like, if you're a girl, don't be afraid. But we're looking for bookkeeping help, legal help. So like if you're a legal intern or a paralegal or whatever, software engineer, if you just want to be an intern, whether you have experience or you don't. Obviously, if you don't have any experience, you want to learn intern, you know, that's going to be a lot lower pay than what somebody with experience would be able to earn, which makes sense. It's totally fair. But you know, my goal is always to take people from intern, train them, and then boost you to great pay. That's the goal. So anyway, those are my thoughts. Thank you so much for watching. Email us at jobs@meetkevin.com if you're interested. Make sure to send a 60-second video of your pitch. Thanks so much. Goodbye, and check out the coupon code at meetkevin.com. Thanks, bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.